We are constructive on U.S. power demand. We are looking at 2.6% power demand CAGR in the U.S. market for the rest of this decade versus almost flattish power demand CAGR in the past decade. But as I mentioned, we still think 40% of this extra demand coming in could be met from the existing power system because we still have some surplus power in the U.S. market. And in a scenario where AI data center demand growth surprise to the upside, of course, we do expect the U.S. battery demand to grow from 40 to 50 gigawatt hour to nearly, in our bull case scenario, about 160 to 170 gigawatt hour by 2030. But again, this is still where China's energy storage demand is right now, and that is exploding even more faster. So I do agree the battery will still be important in the U.S. energy ecosystem. But again, this is not the only solution. They're building combined cycle gas plants. They're also building single site gas peakers. And you have existing some surplus in the power. So all these combined together, battery becomes still important, but not the only solution, unlike China, where the addressable market exploded in a more meaningful way for energy storage.
Nikhil, China and power, if I'm not mistaken, just rough stats, right? China, in terms of generating electricity, outpowers the U.S. 2 to 1. Right, so for their data center applications, power isn't necessarily a problem. What I can't figure out is why do the data centers seem to be clustered in the most unlikely places, that is often in the middle of the desert, when these things need to be cooled, obviously. I can't figure that out.
Sure. So look, I think the China has one grid, one nation. It is a very connected. It's unlike U.S. where you have a regional grid for each of the states, right? So you can choose to optimize your locations, whether you're building the consuming capacities or whether you're building the supply capacities for power. You want to naturally utilize best part of your resources in order to optimize, given the country has one grid. Of course, the bottleneck in China is still the high voltage distribution lines in order to ensure there is enough evacuation of power where it is produced and where it is consumed. So again, there is a concentration of data centers in certain regions, as you mentioned. There is a concentration of data center power demand in another region, and there is a concentration of power supply bill, which is in another region because of the natural resource advantage that China has. So they're just optimizing that to leverage on one grid that the country has, a connected grid.
Sensitive question, but you're a pro, so I'll let you sort of navigate this as you see fit. I mean, the two economic systems, U.S. and China, vastly different, right? China, top-down command and control economy, it's communist, et cetera. A lot of times, policy decisions, including to do with where to relocate large infrastructure, can get very political. Often it is political. I mean, that's one of the reasons why, for example, yes, they do have one of the largest nuclear power plant build-out programs on the planet. A lot of these plants happen to be sited unusually and worryingly along fault lines, right, where earthquakes actually tend to happen. Does that play into where they're placing data centers as well? Do you know?
I mean, I can't answer that question with a lot of.
It could be cited in an area where, okay, this is a poor province or area. Okay, they could probably do with the jobs and the creation and maybe the real estate that comes along with it.
Yeah, look, I think that depends. Of course, they do want to lift up their lower tier cities into a higher tier eventually, and a lot of new age industries will have to be developed on those regions as well. But I think from China's standpoint. And when it comes to AI and data center, one of the most important thing is to power those AI and data center at a very competitive power price. If you put them in the wrong location where you don't have an access to competitive power, it becomes really difficult. So when it comes to some other regions like US or in any region where you don't have a connected grid, you can't place them at a location where the access to cheaper power becomes difficult. With China being one nation, one grid, and assuming HVDC, high voltage distribution line bottleneck, is a more short-term issue, they can place their consuming capacities where they would like, for example, more prosperity, because the access to power for them will be more easily available at competitive price if the infrastructure is well connected from a power perspective.
Okay, understood. I want to get back to EV power and EV bats, right? There's CATL, but it's not the only one. It's dominant, obviously, but it's not the only one. And I'm wondering whether, if there is involution happening among battery makers in China, right, how much pressure there is on them, and we're in an overcapacity situation, right, to export that overcapacity outside, start manufacturing closer to onshore, nearer where their markets are, where they're selling Chinese EVs, etc., and what that is potentially doing to domestic competitors.
Absolutely. So I think China's overcapacity was perceived very large a couple of years ago. Domestic demand has been still growing over 30% as a combination of both EVs and energy storage, and as a result, the overcapacity has shrunk, but it is still there. One of the major markets they've been exporting is the Europe. Now, when you look at Europe market, the import tariff on importing batteries, whether it's from China or elsewhere, it is very small. It is less than 2%. So there's a lot of arbitrage when you make, as a Chinese tier 1 maker, a battery in China packed for EV purpose at $65 to $70 per kilowatt hour. The landed price of that in Europe market is less than $80 per kilowatt hour, versus the onshore producers cost over $100 per kilowatt hour. So there is up to 30% cost gap between imported China batteries in Europe versus the onshore makers. So that clearly is a challenge to take off the local manufacturing industry in that setup when your imported batteries are so cheaper. Now, that said, this is not a long-term solution. Tariff barriers can always change. And that is why we are seeing a lot of onshoring also happening from the Chinese battery makers in the European market. The key will be to see at what cost they are able to localize batteries there, because your supply chain is more China dominant. Local labor cost and depreciation might be more. But again, we still expect China to remain the lowest cost producer globally. Even when they onshore batteries in the other region, we think they'll be more competitive just because of the sheer scale and the manufacturing efficiencies that they've achieved on their batteries.
Even when they move into next-gen SSD?
Well, again, for solid-state battery, the debate is still on. Everybody's trying to commercialize solid-state. Everybody's trying a different route to commercialize as well. But again, the level of R&D that China is putting as a percentage of the R&D globally done in the battery, it is outsized much higher. It is higher still. It is very competitive to their current market share. So again, if they're already very strong on the cost curve and with the level of R&D they're putting in, we do believe the strong will remain stronger in the battery industry.